I'm here. Sorry.
Guys, well, welcome. Today we have Skye Root. He's a real estate broker and founder of Root Agricultural Advisory, and he's going to be giving a discussion today about some real assets and real asset investing. So take it away, Skye.
Thanks, Christine. Well, it's good to be with you guys. I've been in the real asset investing space my entire career, and frankly an exciting place to be and place to work. So I do want to make this a little bit more interactive, just in terms of talking about real asset investing, because I could bore myself talking about it, given how many years and different things I've been involved in it. So I want to start by either answering the chat or unmute yourself. But who can define a real asset? What does it mean, a real asset investment? When I say real asset investing or a real asset, what am I talking about? Any ideas? It's like something tangible. Real estate. Yes, real estate is a real asset. Absolutely. Anything else? Good. A small business. Yeah. So private equity, natural resources. Good. Farmland, water, commodities, timber, mining, gold, silver. All those would be considered real assets. Diamonds would be another one potentially that would be on my list. Good. And any other thoughts of what a real asset might be? Yeah, Gabe has a question.
My question was basically, like, you said a small business is an asset and a tangible how does it differ, a small business that you own entirely from owning stocks of a company in the stock market?
Mm-hmm. Yeah, so that's a great question. So the succinct answer to that is that it's a distinction between a public company and a private company. So in public companies, the equity of that company and their debt oftentimes is traded on open markets. Whereas in a small business's case, if it's small enough, its equity is usually owned in the hands of one owner. Like my dad or myself. We own a business, and I own one, or actually my wife owns 50% of the equity, and I own 50% of the equity in my company. But in kind of more mid-sized small businesses that aren't publicly traded, the equity is private equity. So there are private investors in that business. So that's a great question, but it's all the same general principles, but it's public versus private in terms of how it's traded. Great question. So, and if anybody has another question, please, ask on the chat or unmute yourself and interrupt me. I have 4 young kids. I'm used to getting interrupted. So we already talked about this, but kind of high level, but real assets are things that can be seen, felt, held, collected. And I think we hit every single one of it. Maybe, we didn't talk about coins and stamps. Everything else I think we talked about. So I like to invest in a lot of these different things personally, but my expertise in terms of my day-to-day career and oil and gas is definitely part of this as well, in terms of real assets in the oil and gas space. So and solar, wind, some of those renewable energy stuff, that would also be part of the real asset space. And so great question. So my expertise, though, is in farmland and in water. It might come as a surprise to you, but a lot of public retirement funds, think your college professors, your big school districts, a lot of them own farmland as an investment in their pension funds. So, and I made a career out of helping them invest those funds. So let me ask a question. Why do you think a pension fund, a large multi-billion-dollar pension fund, why would they want to own farmland?
Because it's safe.
Yeah, it is. It's very safe. It's not a crazy risky investment. Well, it can be a risky investment, but in general, farmland is very stable. it's the cyclicality of it is very stable. Jessica, you hit the nail on the head. The next slide as well. And beyond being safe, you got to eat. The world has to eat. And we're seeing, unprecedented population growth. If you look at this slide here, this is just from the U.S. Census Bureau, but this is world population growth, and we're forecasted right now we're at about 7 billion, and we're on track to be at 9.5, 10 billion by 2050. And so that's a lot more bodies to feed, and so a lot more calories that need to be consumed. And so ag becomes, farmland agriculture becomes a really important part of the conversation. And so a lot of these investors, they're not out there looking to turn farmland into concrete. They're out there looking to have a secure food supply and it's, again, it turns out to be a pretty stable investment. So farmland is getting a lot more efficient. I'm going to leave it at that with this slide. But just as an example, in the Western United States, water is a problem. Water is a scarce resource, and you need water to grow crops. And so a lot of markets have spun up around the Western U.S. based solely on water. So, the fact that we have a water crisis that's brewing, and we already have one, candidly, but it continues on in California, Nevada, especially in Arizona, in those kind of 3 states. It's a very big deal. So I want to take a minute on this slide to have you look at, this is a 25-year graph showing annual returns and standard deviation. So the bottom, so standard deviation would be risk, right? On a risk return paradigm. So the higher the standard deviation, the more risky it is. The higher the return, the better it is. Everybody wants a higher return. We all want to make more money on our investments. So the higher the return, the better. So the farthest you can get to the upper left of this graph, the best, because you have low risk and high return. And the worst place on this graph is the bottom right. So high risk and low return. So you can see where farmland comes out at. It's got a higher return than corporate bonds, T-bills, the S&P. The S&P, actually, I think that S&P number should be a little higher. I don't know if you can see my cursor, but it should actually be more like 5% right now over the 25-year window, because we've had a good rally in the last year. But nonetheless, it still is riskier than based on the standard deviation metric, still much riskier than farmland. And then you have things like foreign ETFs and stuff like that are much more risky and have had low returns. So you can see on the paradigm here that perhaps farmland, it may not be the highest returning asset classes we're showing here. I'm only showing 5 asset classes here. If I showed you all asset classes, farmland would not be the highest returning asset class, but in this case it is. But it's certainly the highest returning, lowest risk asset class, which is interesting when you think about that. So another way of looking at it is correlation with other assets. Farmland has negative correlation with certain assets, which is awesome as a potential hedge, like inflation hedge, for example. Farmland's an excellent inflation hedge because it's very it's candidly non-correlated to that. I'm not going to spend any time diving deep into this, but this is another example of the various benefits of investing in farmland and return profiles and things along those lines. So then just a quick moment on water rights. So water is important in the whole U.S. Typically speaking, in the eastern U.S., water is the conversation is more about water quality and contaminated water and getting rid of water off of fields and stuff like that. In the West, it's more about water quantity. So quality in the East, quantity in the West. That's 2 general conversation. And as a result, riparian rights are really common in the East, and prior appropriation is common in the West. And in the West, it's basically first in time, first in right. If you use the water first, you get the higher priority. And so that there's a whole value structure that's around that. So you could see here, based on what the states look like, various ways to approach water. And this goes back to what I just said. The East is all about rivers and quality, water quality, and the West is all about, regulating water quantity. So when you talk water facts, establishing a market becomes pretty important. So when you add the ocean plus the polar ice cap, you're talking about like 99% of the water of the actual water endowment of the world. Over 99% is not fresh water. And so there's only about 0.65%, or call it less than 1% of the global water supply is actually available for human use. So that's to paint the picture of a scarce resource, and water is obviously how we grow our crops. And certainly the ocean water, I've had it pointed out before that ocean water is certainly helpful in the whole hydrologic process of, precipitation and kind of evaporation and all of that, kind of just as we think about the way water moves in our atmosphere. But in terms of what we can actually use, it's a very small amount. So we're going to watch this short video here, if I can get it to pull up.
So here's what we have today for fun, just to get an idea of why we care about how we raise our food.
Can you hear it?
Where we raise our food, and whether we drink bottled water or not, is the earth. Behold. Many of you probably seen this example before, where an apple is used to represent the earth. So we're going to go through this kind of quickly, but this apple we're going to use to represent both how much land we really have and how much water we really have. And it'll be easy for you to see that even though you look around you and you think, why do we worry? We've got tons of this stuff. If we take our view back out and we actually look at the globe as a whole, we'll find out that we really don't have very much to deal with at all. So we're going to have to be pretty smart about how we use it. So the first thing that we're going to do with the earth is we're going to cut it in half. This is all the water up here. And then we're going to cut that in half again. So we've got more water. So right away you can see that most of the earth is actually water. And what we have left here of the earth is the land that we're all living on. So I'm going to cut this in half. And this part of the land that we just cut off, this is pretty much uninhabitable stuff. It's way too rocky, or it's way too dry, it's way too wet, way too cold, whatever. We can't use it for anything else. This is what we have left. And we need to cut this into 4 pieces. We'll get back here on dry land to do this. Then I'm going to take a sliver, and I'll reference this for later. Put it over here in the ocean, keep it out of the way. So we have our land. Remember, this is our land that we can do anything with, we can live on. And most of it we're going to use for housing, urban, the mall, all that kind of stuff. Not going to really plant on it. This is the only land that's left that we're actually using for what we call arable land, or land that people can plant on. We have this 1/32 of an apple representing the entire earth, the amount of land that we have available, arable land, to grow crops, to feed ourselves, do our biofuels, whatever we want to do. And if you really want to be accurate about it, what we have in reality is all we have is just the skin, just this amount. So this is all that we end up with out of the entire earth to think about in terms of growing our biofuels, feeding our people, performing all the functions that soil and earth should be able to do. And so that's why it's important to have people who are going to study biology of the soil, and why it's important what kind of practices we use to do our fuel. And then I want to get back to this little thing right here. Remember when we sliced this one off? When we sliced it off of one of these pieces of land, this is actually arable or potable water. This is actually potable water. It's the amount of water that we can drink. Remember, we threw all the rest of the ocean was out here, right? This we put in with the land, because this isn't all drinkable water. So this is the only amount of potable water we have in the world. So that's very important for us to pay attention to our water quality. So here we have the land, and here we have the water we can drink, and here we have the oceans. Remember the oceans. And for the most part, the oceans, we can't get at and we can't do too much with. They can be a sink, but they can't do much else. But part of the ocean is still biologically active, about this much of it. And by biologically active, I mean this represents enough of the depth of water around the world of the ocean that light can get through it. Light can get through it and get photosynthesis and algae and those kinds of biological activities. So that's what we've got out of all the ocean water that can actually do biological activity. And of that, just for fun, let's take a look at what part of it is North America. So around the North America coast, about a fourth of that, or so it'll be a 32nd, I suppose, is what is all around the outside of our country. And this is the amount of water that's available to do photosynthetic activity. So you can see that even though you can look around you and it looks like there's tons of soil and tons of water, and it would just absolutely never be a worry. When you take your view out and you look at the earth as a whole, you find out that we are very limited in our resources. So it makes a lot of sense to pay attention to how we're going about using these in the process of our daily lives. Okay, that's it. Okay.
All right. Well, I hope that was interesting. I don't often get this platform to talk about that topic, and it's something that I'm fairly passionate about, as you can tell. And you know what's interesting is that I'm going to skip over some kind of value drivers and stuff here, but so what's interesting, guys, is that I've had all the kind of call it Wall Street financial training, in the real asset space and the valuing stocks and bonds and doing all the different things that you guys do through that you work on or are interested in. And but at the end of the day, you use the same principles when it comes to valuing farmland as you do valuing a stock or a company. They're all still the same principles and financial principles. But then you layer on top of it, principles of agronomy and biology and chemistry and, a variety of science and then a social dynamic of, labor markets and, immigration issues. And there's so many things that are part of that kind of dynamic of farming and then, boiling it all the way down to we all have to eat. And where does our food come from? So it turns out to be pretty rewarding to be able to talk about that kind of stuff on a financial basis, but also to be able to talk about it on a human basis. So with that, we talked about book value, market value, intrinsic value. We talked about kind of real assets and water and farmland. We got about 5 minutes left. What questions do you have for me? 5-7 minutes. I think you said quarter after usually. So what questions do you guys have for me? How'd you get into your field and what interested you? So I grew up on a really large farm in Oregon, and I always had a gut feeling that I'd be involved in agriculture, but I didn't know how. And I got pretty fascinated with Wall Street and that whole kind of investment banking and consulting and different things when I was in college. And I learned that I could marry my two loves, agriculture and finance, and I did. And so the path is much longer than that to explain, but generally speaking, I stuck with what I was passionate with and what I enjoyed, and it's been a long but fun road. And I'm actually still involved in farming today, by the way, just for the heck of it. I mean, my company is Road Agriculture Advisory, but really what we do is a lot of farmland management and brokering and selling and buying and investing and stuff like that. But my dad still farms 15,000 acres and has a couple thousand cows, and we still go back to the ranch on a regular basis and actually get to work the farm, which is nice. So do you have anyone that really inspired you to go to ag finance? That's a good question. I'd say not any one person as much as there were several people that I looked up to along the path that kind of somebody that was really good in water rights that inspired me. My dad that was a really good farmer and really innovative farmer that did a lot of cool stuff. My mom was an accountant. And, you start mixing in some of those influences in your life. I had a couple of professors in college and in graduate school that were kind of help steer me, like, hey, you could be really good at commodity trading, or you could be really good at this. And you mix all those people together, and that's how I landed up, being there. Do you know any good books that teach about real assets? That's a great question. Yes, there are some good books out there. I can't think of any, Jesus, that are about just, the broad topic of real asset investing. There's some good ones on water. There's some good ones on real estate. There's some good ones on farmland investing. Trying to think of in a normal finance textbook, there's one chapter on real assets, and they just teach you about all the things that we just talked about, basically a paragraph or two a piece about each one of those in a real assets in just a finance textbook. But in terms of a broad-based, I should go do my homework and see if I have one that's like all of them, because I can't remember ever reading one that's just all of them.
Looks like that's it. Skye, I can't thank you enough for being here with us today. Super interested in what you do with water and timber and land. I think it's a totally different avenue of investing that we haven't heard about yet. So thanks for exposing us to it. I'm going to follow up with you to see if you had any book recommendations that we can send out to the students to learn more. But thank you. So grateful for you being here today with us, Skye.
Absolutely. Yep. And good luck, guys. Thanks for participating, and have a good afternoon, evening.
All right, you guys. Thank you.
See ya.
Bye. Thank you.
Thank you.